Hey everyone, how we doing? Just finished up a live stream and going into the final hour. It's just after 3 p.m., 3:11 p.m. Eastern Time on the 19th. Happy Fed Day. Here we are looking at the market. S&P up 1.65%, SPY right there at 1.58, equal weight even holding at 1.11%. The Qs up over 2%, NASDAQ, NDX over 2.05, the Dow 1.3, Russell nearly keeping pace with the NASDAQ at 1.97. We got the VIX declining once again. This is another kind of big, sharp day to the downside, which is nice. I mentioned the last couple of days here having about 4 to 14 days on average decline. We're sitting around 6 candles. I think today's being number 7. So that's a good sign. So 1, 2, 3, 4, 5, 6, 7. So if we can stretch this into possibly 10 days of a VIX rally to a VIX retreat and reversion, I'd love to see 10. Now the hour is not done. It's closing bell here shortly. I had some big key levels. Market makers have been growing this level. I've seen some delta hedging going into this 573 strike. It's still right there for the taking. I don't know if in the next 40 minutes we're going to actually tag this thing. But if anybody was long, which most of my trades today were angled slightly long outside of the neutral trades this morning, I traded. Hang on, hang on one second. Hang on one second. All right, sorry about that. The dog was having a little reverse sneezing episode. Anyway, a couple of sell trades this morning that worked out pretty nicely. Grabbed some small profit on SPX, and then anything I was just looking at getting long. I didn't love the premium. I didn't take any bonus trades. My daily profit play, we usually look at some broke wing butterflies or looking something bullish. What I'm monitoring right now is for my daily my double up alert service, and that is a trade that is looking certainly a lot better. If we can sustain these runs for the next day or two and just kind of hold where we are, here's a trade in the SPY that I do have an expiration above 555. Or I'm sorry, that's for the put side. Here is the call side. So I did a 555 by 565. Currently, it's up $315. Max profit on this is 425. So if we can just hang out, currently trading around 569, almost 570. That's good. I need this thing to stay above 565 for my full profit. I will be watching this closely. This is going to expire on Friday. My goal is I'm looking to close this one out for profit, hopefully full profit. And if I can close this one for a winner, then this works out one of two ways. I take the win here, and then next week we either stay above 566 for another full winner, or we have a terrible decline. We go down here below 545 for a full winner. That would be a 525 winner. So my max risk here is 475. If I get the call sides right, then I get 425 here and another 425 here, and a 475 would be my loss. So I'd have 950 in winners minus the 475 max loss. I still walk away 2 winners, 1 loss for a 475 net profit. And that is playing the markets both ways and still coming out ahead, which is a good thing. So anyway, watching to see how that plays out. I've been talking a lot about the technicals in the near term this week. Getting some fresh highs through this little Monday rally is a good thing. If there's continuation through this, there could be some, I don't know, there could be some, indecision here, maybe a little wave structure on the backside of the trend line, but I think we still hit symmetry. If there's going to be some follow through post Fed, this wasn't like a fast mover. This is a very slow rally. So the bulls might be coming in with some trepidation, but they're still in nonetheless, and prices going higher. So that's not a bad thing. If anybody listened to the press conference today with Jerome Powell, it was pretty reassuring. I mean, I've liked him as a Fed chair. I know nobody likes what the Fed does. Nobody understands what the Fed does. Everyone says it's manipulating the market and don't fight the Fed and all this crap. But look, the Fed has single-handedly reacted some of the biggest crises we've had. This market has had booms and busts, and it's going to continue to have them. And so, at the very least, for better for worse, the Fed is there. And I think today, because we have so much uncertainty with Trump and tariffs and the current administration with fiscal austerity, I think the Fed at least acting with some type of transparency, some type of stability, some type of reassurance is at least showing up in the markets today. So that's a good thing. I'll take that for what it is. If we hit some symmetry in the near term, there's a couple of key levels that I'm watching. So coming back into this previous low, that's right around a symmetry swing, going into a symmetry swing, which is right there where that green line is, around 57.95. That to me offers up some good profit potential for this near-term rally. Now, I'd love to say that this is not done yet. If we have a pullback and another resistance becomes support and the market makes a fresh high, if we are greater than, I would say, 58.50, if we're greater than 58.50, then the market, to me, looks like we're turning the corner to then see that the bulls can step back in. Now, whether we're coming back to all-time highs remains to be seen, but at least in the near term, I think this is a good sign to show some centering. Now, that does bring me to a couple of trades that I went out bigger picture. Right now, this is a longer dated daily profit play. I'm in for $20 a profit. It's up $18 to $20 right now. This one is up around $50 right now. So not bad. These are the same expirations. I don't know why. Maybe it's just liquidity here, but the AM expiration it's virtually the same trade. One's just an AM versus PM expiration. But one trade is up about $50, which I collected $5 on the trade. I'm up $50, so it's about a 10% profit. We'll talk more about this in class tomorrow because maybe, just maybe, it would be worth protecting and grabbing. If I grab, let's say, $50, $60, $70 out of this trade and grab $20, $30, $40 out of this trade, it adds up. Just take the profit, eliminate some of the risk. Although we put on these trades with a high implied volatility. So we'll see, but we'll talk about some more tomorrow in class. Nice little day in the market, 85K P&L brings my year to date up about 130 grand. My watermark high for the year is 195. So I'm still playing with profits. I'm still, generating income when I can. I'm still trading through all this nonsense. I did put on a fresh trade today. That trade was on Uber, and I'm going to share that with my Project Options Edge traders. This trade here is 67.50 by 65 and then $60 puts. I collected $1.34 credit on this trade. And I'm willing to own, which would be around a $57 or $58 break even. So Uber, that would be around 57.41. Okay, so I can build that trade out. Let me float this down here. So that trade is Uber. And I went out to the May expiration. So we're adding a couple legs here, going out to May 16th. Yep, May 16th expiration. So I bought, these are all puts. I bought the 70. Nope, I bought the 67.50. 67.50. And then I'm selling the 65. And then I'm selling the 60. There. Okay, so this is what the trade looks like. Current price is on Uber 73. 60. I bought the 67.50. There's my 65. There's my 60. Creates a little bit of a profit trap here. Right now, actually, let me change this. This is edit to 2 contracts here. There. That's the trade that I took. So I pulled in $1.34 when I took the trade. So anything like $1.25 is fine. $1.25, $1.30 is fine. We've had a decent pullback on Uber. I think there's really good support around $60, which I'm okay owning some of the shares there if needed. Fair market value on Uber is up over $100. It's like $150 to $160 discounted cash flow model. So I do like that, and we'll see. I think obviously it's potentially subject to the broader economy. If people really cut down on ride share, yes, no, maybe, but it's like that'd be people stop working. If people stop working, then or people stop going out, perhaps it affects their price a little bit. But mechanically, it's about a 90% chance of profit. I'm going to take it. There's a profit trap built into it, so I like this trade. So this is going to go into my project options edge for Uber right here. There we go. Okay. So key levels today, like I said, 560 on the SPY, 572 to 573 on the SPY. We're just fading off that a little bit, and I'm curious where the market settles for the day. We did come up and we just got above that high from Monday, so that's not a bad sign. If we have, we still have a gap right here. We did fill this gap, so that one's checked off the list. We still have a gap all the way down to the lows if this is going to be fading hard, but remains to be seen. So I would certainly like to see a little bit more of reassurance from the Fed, which we got today. A little pullback, see if the market can push up here by the week. If the market can finish on a positive note for the week, that's kind of good, taking us into one of the last weeks of the quarter. And there's some seasonality patterns that I think everyone is aware of. Let me see if I can go seasonality. Heck, let me see if I find it in my screenshots here. Nuts. Taking too many screenshots. Okay, no worries. But basically, I'm looking for there's dips. There's dips in March. There's usually stability through end of March and into April, May. We start to see some rallies. So if we can at least finish the week and possible quarter with a bit of a fight back, let's look at the weekly chart here. If we get through this week without doing too much damage or revisiting this long low from last week, if we can just have this market stable or even a little bit of a fight back, it'd be nice to see this, because this gap lower to this open, I think the bulls could possibly pull back into that zone. So just reading price action, that's a pretty big gap that if the bulls can come back and try to fight into that, that's a good thing. That would allow us to either close out this week on a decent recovery, or we close out this week and then have a little push going into next week before the end of the quarter and just see if the market can fight back a little bit more. Okay, so that's where I'm at on the S&P. Again, actively trading, protecting profits. I rolled through an entire watch list this week on Monday. BITO. I'm just adjusting a collar trade for next week. Snap, I added covered calls. Chipotle is going to be full profit this week. Took a winner on Apple. I took a winner on NVIDIA. I rolled out a collar trade in the shares that I own. I closed out a wide credit spread. I had a 75 by 55. I took in $2.40. I closed it for a 63-cent debit, so I kept $1.80 and change. So I had like a 70+% profit on that one. Let's see, Alibaba's fine. That's up. Baidu's fine. Pulled a profit on Amazon this week. I've got a full credit expiration on Netflix this week. I added to my diagonal trade on Pfizer. Full profit on XLC this week. Full winner on Berkshire Hathaway, BRK.B. DocuSign, I took a small loss on. Q's, looking to close out a winner. Let me see what that looks like for right now. I think I'm going to close this one out. Give me a second here. Q's. I think on this one, I just closed out this trade. This is out. So this is out to the 31st. Okay, I need to watch this one. Right now, I pulled in 96 cents. It's up 58 cents. This one is still going to run a little bit longer. That's a 465. I want to watch this one closely for the end of the quarter. This one's looking decent. I think, again, it's not until the end of the quarter. 450 is a really good strike. 465 might be a little bit more threatened. This one out to April is fine, but I want to keep a close eye on these. And then for my QQQ that I have here, max profit would be about $110. I'm up $70 right now, about 70% of the profit. I think I'm going to go ahead and just take profit on this one. This one is not quite offering a bonus trap. It's break even on the bonus trap. It's up $53. Yeah, I'm just going to watch this one closely. So if we stay above 450, that's good. We stay above 465, that's good. Let me take a look at the option chain for the 31st. The expected move to the downside. I mean, the nice thing is within a one standard deviation move, this should be defended. based on where we're sitting right now. So if we have a 1 standard deviation move, then that brings the Qs potentially down to a $16 move, which is around 466, which means my 465 would be defended, and I'm good with that. But again, watching carefully. So we got some expirations to monitor, but that's good. That's part of my waterfall service. We got a lot of trades we're watching carefully. I've had another big P&L swing today in XSP. So right now, this was down about, I want to say up to about $3,000, and now it's down 930. So again, we just need a little bit more time in these trades. But keys to next Friday would be the XSP, which is trading at 568, stays above 550. Right now, go out to next Friday the 28th, 550 is a 17 delta. This is really important. This means that currently trading based on the options market, current volatility, current IV rank, that given a 1 standard deviation move, we're going to be around 555. That should be enough for us to potentially hit the sweet spot where we can get the profit trap. So this trade right here, if we're less than 580 but we're greater than 550, we get a profit trap with $1.48 on the winner. And that would be pretty nice. And that was part of the intention in the first place. On this trade here, similar setup. If we're below 579 and above 550, same thing here out to the 28th and 31st. So the 31st, the 28th, if we're above 550, that's a good thing. If we're below 580 or below 579, then that's $1.53 and $1.58 for a little profit trap and an overall winner. So like I said, nice thing is right now those deltas are low enough that in just a typical mechanical sense of selling premium, a 15 to 20 delta is usually a high probability of profit given a slightly higher IV rank, which this one has. So that is encouraging that unless we came back to revisit the lows on XSP, those trades are looking good for the next couple weeks. So if you've got anybody watching out there from Waterfall Income, those are some good looking trades on XSP. We just need a little bit more time, which I know has been a little bit more nerve wracking, but it's still looking pretty decent. Now, the day is not done. We've got the final 30 minutes of trading today, and what was up through FOMC is now starting to retreat. I'm not sure if Powell's still talking. Maybe he is. Let me see if I've got anything on financial juice. Fed life rates unchanged as expected. Sharply reduced US GDP expectations, increased unemployment rate expectations. What is this? Sharply reduced. Stocks rose, bonds fell. Fed Reserve kept interest rate unchanged as expected while forecasting 2 rate cuts by end of 2025. Let me see what this says. So dollar index dropping, S&P up. I'm guessing this is the 10-year. I can't tell. I'm guessing that's the 10-year. All right. Powell's press conference ends. That was at 3. So that was 10 minutes ago. Pretty strong support for the balance sheet decision. Fed staff forecasts assume full tariff retaliation. Wow. I wonder if that's where this market kind of topped out. Assume full tariff retaliation. I mean, that's not a bad thing as far as to assume, because that way you're kind of preparing for the worst. But who knows? And that's where this kind of April 2nd agenda is going to catch the market. Where do we have to get through it? Do we have to kind of survive it? That's what April 2nd is going to be. I hate there's a huge deadline like that. We're trying to get through Fed. We're trying to get through core PCE. We still have the quarter to get through. That tariff uncertainty kicking off the first part of April is not going to be easy to predict. Let's see here. Fed staff have a placeholder forecast on the effects of tariffs. Okay. Uncertainty grows, but is it being resolved? I mean, I think based on the VIX, it is, at least in the near term for repair. Dollar trims gains at Powell's comments. For now, the hard data is solid. Like I said, I think he was reassuring to the market. I listened to most of it. I mean, his Q&A started pretty early. I did pull a screenshot here of the actual statement. So of the actual Fed statement today, the difference is what is in black was what stayed in today. What was in red was previous FOMC minutes or statement. So it's funny how this works. Uncertainty around economic outlook has increased. they just removed some of these words. Committee's attention to the risks, both sides of the dual mandate. So it's kind of the same, but they changed. So they removed some of this language. They added in some language here, and that was pretty much it. So beginning in April, the committee will slow the pace of decline in security holdings by reducing the monthly redemption cap on Treasury securities. Committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion. So that was new, and this was modified. But when he started taking questions, or his initial discussion was, like I said, GDP growth, labor market steady, wages outpacing inflation, inflation improvements, need to assess identifying uncertainty around tariffs. So it's not a surprise. I mean, it's trading, it's intraday. We came up to poke this 200 moving average again. Right now, it is acting as resistance. Okay, so we will see, and this is a really key level for the bulls out there. If this daily, and you can change this to the daily time frame, but this daily, this is my 200 moving average. This is an exponential moving average. Some traders prefer the simple moving average, or a smooth moving average. I've used the EMAs for a long time because they are a little bit more aggressive. So I'm watching that level right there. All right, so I'm going to put a horizontal line right here, horizontal ray right here. Okay, and then go into a lower time frame. So if the bulls are able to clear that hurdle, that would show some price action above the 200 moving average, which is good, because an easy way to look at the market down below the 200 moving average, back above the 200 moving average, that is going to entice some buyers to step back in or start stabilizing positions, and maybe even running prices up a little bit higher. So I do think this 5,700 handle is critical. Harmonic levels I've looked at between 5,750 and 5,800. So I think the market can make a bit of a poke above it. So wouldn't be a bad thing. Okay, and here, let me just go ahead and see if I can take some profit on this one. This is $1.10, 2, 3, 4, close. So pulled in $1.10, close it for 39 cents. See if that will fill. Filled. Okay, so that's a closeout on the Qs. This one here. March 31st. Watching that one. Watching that one. Need to be above 450, 465. Watching carefully. Okay, that's good. A bunch of puts there. That's fine. Yeah. So stuff to watch. Any charts? Any questions? Any requests? What app do you use to mark up on the screen? It's called Epic Pen. I've used that for several years. It's a good annotation tool. There's another one called Ink to Go. That's not bad. A lot of things can get built into, if you're in like any type of stream, they build in some annotation tools. He didn't say retaliation that I heard. I mean, it's not his place to say retaliation. I mean, that's Trump's MO. Everything is like, we're going to war, tariff war, trade war. I mean, it's not Powell's spot to say retaliation. I mean, he can acknowledge tariffs, but it's just tariffs and it's uncertainty. That's kind of the key language that Powell is using. And for the most part, I think he, as he does, he's given enough information, but not explicit. I mean, it's still a very vague interpretation. I just think that the nice thing was he wasn't fanning the flames of pessimism. I mean, the economy looks resilient. Labor markets are solid. The Fed is pointed towards employment, improving inflation, and price stability. That's what the Fed does. So, I mean, what the market has to do with is current inflation. So next level. I mean, I said in Telegram, it's between 560 and 570. So you look at this level here, 560 to 570. We did make a run up towards 570. I just don't think this is done. I mean, this to me is good until Friday. So to me, Friday would be the days that these are going to be tested. So are we going to hit there in the next 24 minutes? I don't know. Probably not. But if I had to trade out to Friday's expiration, I wouldn't be surprised if this market can go higher, possibly even gap higher, and see some continuation. But until then, this is where I see market makers are stepping in, and they have been selling premium here, and just going to keep prices contained, you know, and that is the game. It's a combination of who's selling premium, who's buying, who's getting the direction, who's hedging. This is where order flows really matter. Okay, so that's where I'm at. But like I said, I think that these levels get tagged. I think this level gets checked or checked by Friday. I would prefer, and I put this in Telegram, I'd prefer to see it checked at 572. Right, this is a 572 to 573 strike. I'd love to see price come back and at least hit this upper level. That would be nice and clear. This level, I think there's still room to run into the 575 to 578 zone, or even 575 to 580 zone, similar to what I'd see in the SPX of that 5750 to 5800 zone. So any additional relief is probably a good thing versus the market's like, oh, we're up today on the Fed, squash it right back down. It's nice to see that the VIX is retreating, and it's nice to see the broader market is up today. If we take a look at the heat map, I'm just curious how this thing is looking for the day. Not VIX. I need to go FinViz. There. I mean, this is pretty good. You've got almost 75% of stocks advancing today. That is a broad market rally. We've got Nvidia up today, Tesla up today. Tesla is up over 5%, up to 237. You get Nvidia up to 119. It's up 3%. Broadcom's up. I mean, this is good, right? Mag 7 has been beat up pretty badly and quickly, and that was a big rotation. I think it's still an important rotation away from it just because it got so concentrated. But energy is up. What else? Utilities up. Financials up. I mean, 75%. That's a broad market lift. That's good. So I certainly welcome it. I don't mind seeing green in the portfolio. That's always a good thing. And hopefully, well before we get to all-time highs, whenever that is, hopefully I'm at fresh highs for the year. So year to date, it's growing, but I'm looking to hopefully eclipse 200K or better before we even get close to all-time highs. So yeah, so far so good. But we're not done. We're not out of the woods yet. And I mean that. Like, this market has to kind of prove we're going to get above that 200 moving average on the daily time frame, get up in this window, and that's where my pullback level is. This is a harmonic merge. We've got lots of structure back in here. So between this 5780 and 5850 zone, that to me is where the bears can say, okay, thank you for bringing price right back to us. We're going to now attempt to squash it back down. If you look at this trend line support, this support broke. So does that support become resistance? Well, the market can rally to there, and the market can fight back, and we can have a little tug of war. But if the market can form a higher low or maintain an equal low, I just think that the health of this market right now, to make sure this U.S. market stays somewhat resilient, I think the health of this market can't go too much lower than 5,500. Now, I know we already put in a low, but if we go lower than 55, that would be a bear trap. I think that's the best case for bulls to have their opportunity to time this market in 2025, is we don't do too much damage below 5,500. A move below temporarily and a move back above, to me, is a good sign to be long. But we had the fifth or sixth fastest correction in history, and we saw sentiment extremes and other things, right? How long will the forex market keep reacting to the Fed decision before it cools? I mean, are you asking that question for the last 20 years? The Fed's always been influential in the market. I mean, I don't know what positions you're looking at or what positions you're wanting to see, but dollar index is heading down to some fresh lows. Risk appetite is going to continue to drive the dollar lower. I certainly know the Trump administration wants to see a weaker dollar. And this is something, I mean, this is a large move. This, especially that accelerated 3-day move, to me, this is about momentum to the downside. If the dollar settles here, then, that's where the long dollar comes back. If the dollar continues to weaken, that's probably a slide in gold as well. Meaning the dollar slides and gold continues to go up inversely. So gold did make some fresh highs today. We're at 30.47. We have a new candle high. And we've had a pretty big run since, this is March 11th. So not even a week, it's 8 calendar days, and we've had another pretty good surge on gold. I'm a little bit cautious on this surge because I think this price is disagreeing with momentum. You can pull up any major divergence indicator. You can look at something as simple as MACD. I know I have some subgraphs here, but I'll pull up a MACD for a second. Let me go indicators. MACD, and nothing crazy, just a basic MACD. And let's make this a little bit larger. So let's go to a weekly chart. I mean, I guess the histogram is growing. Yeah, I guess the histogram is growing. We still have some movement. Let me get out of here. Let's go MACD, delete. I was looking at the relative strength. We are showing some overbought conditions on gold. We do have some price and momentum disagreement, so there is some divergence up here towards these highs. Doesn't mean I want to short gold. All it means to me is that I just want to be hopefully adding to my exposure with any type of pullback. I don't know what that catalyst is. I don't know what's going to cause a pullback. I don't really care. I'm still long GLD. I'm long GC, and I have a trade on that is hopefully looking to kind of ramp up some profit as long as we don't go above 32.50. So if we stay below 32.50, that's fine by me. And that's only a trade out to April, so it's not super long. Okay, I see the question there, TLT, sure. TLT, 91.17. This one, I think I rolled out some of my calls to April, and I rolled them up to 92. So I have a 65 by 92 out to April 30th. I'm up some profit on it. This is a diagonal spread. This is $27 of max profit on a trade that cost me around 21.25, maybe less. Let me check and see what I'm at right now. So TLT. So currently, yeah, I rolled out to 92, and I'm sitting on about a 21.17 debit. So 21.17 debit. Above $92, it gets called away for 27 bucks, and I will make what is that? 27 minus 21.17, make 583. I've got about 2,000 contracts running on this, so it's a nice little chunk of profit on TLT. If I go back to all accounts right here, currently up around $11,200. But it's got to get above 92. If it does, then fine. There's a lot of profit. If it doesn't, then I'll just continue to roll this out. I'm long TLT out to 2027. I looked at this year as a way to be the correlation we saw was, what was it, like 0.7 correlation between equities and bonds, which I thought would break, and I thought equities would have a little bit of pain in the near term and bonds would rally, and that is exactly what happened. So I'm just curious right now for the next, let's say, 6 to 9 months if TLT is able to continue to stay bid, and there is a potential symmetry trade here. If this is low to high, TLT, even at this low, would be pushing up towards the symmetry level around, I'd say, $104. If I adjust this slightly down to this recent low, then symmetry looks like a move into the 102 to 103 zone. So I still like long TLT. I think this trade works out, pretty well. So you're just looking for this to continue to make higher lows and higher highs. I don't really want it to get called away. I'd love for this April 17th to not be above $92 or $93. If it is, that's fine. What I might continue to do is kind of roll it and roll it and roll it until I can extract like no additional credit, and then I'll let it get called away. All right. We've got 15 minutes for the close. Let's see if the market can get back up towards the intraday highs. So, I mean, pretty good price action today. A lot of calm. We took some profit in daily profit play. I was 2 for 2 today. The hot streak continues. We've got a nice little run up here towards 571, a pullback if the market can revisit this high. The futures market will be interesting overnight. If futures picks up where the U.S. left off and we're starting to see some flows, that would be a good thing. If the market is going to be green for futures and we gap higher tomorrow, that's probably a good thing. And that's continued to show that these bulls are fighting back a little bit. So that is what I'm watching. So WD, you good on TLT? Francisco, you good on Forex? Currency strength-wise for today, we're seeing that the dollar took a big drop right around FOMC. The Japanese yen getting a little bit stronger. I'm still holding long FXY. The euro, a little bit beat up today compared to the dollar, but still fighting back with that dollar drop. Not a ton of volatility on the vertical axis. 50 upside, 40 downside. You're looking at some pretty small trading ranges overall. Pretty tight trading ranges overall. So dollar, euro. I mean, that's kind of crazy that the euro dollar might be one of the largest range of about 90 pips on the day. at one point, right? But Japanese yen getting a little bit stronger on the day, which is okay. Okay, that is good. Let me grab some other comments and questions here. Give me one moment here. All right. Any other charts questions? Think something you want to go at? Francisco says I'm new to forex. Well, what do you want to learn, Francisco? There's tons of stuff you can look at, man. If you go to my YouTube channel, there's plenty of stuff to pull from. YouTube.com/Chris Pulver. Take a look at my playlists. There's lots of stuff in here. You can go to this trading education, trading 101. There's lots of videos there. Keep it seriously simple. There's a lot of forex examples in there. So I would welcome it. Again, if you're interested, check it out. Free content, some good lessons, equity management, support resistance, trading trend lines, adding to winning positions, price patterns, all that stuff is in here. So if that helps you with some of the forex stuff, that helps you with every market. I've traded. Patterns have been one of my favorite things in any market to trade. But price action is key. So I do a lot of this stuff in here. So feel free to check it out, give me some feedback, leave some comments. But yeah, if you're subscribed to the channel, awesome. We're creeping up there. This channel started just a couple years ago. So I think the next big milestone would be 10K. So I appreciate everyone's likes and subscribes and whatever you're watching this live. I appreciate everyone being here, coming in almost every single day for daily or for the final hour. I'll celebrate a little milestone here at 10K. And hopefully, from 10K to 15, 10 to 20 is just going to happen a little bit faster. But all good. And just a lot of trust content. So, yeah, if you're trading Forex, if you're trading futures, trading stocks, trading options, ETFs, whatever, trading crypto, I mean, I've got a little bit of everything. But that is my style. I will trade what works and I'll trade what makes me money. All right. So just do some more top down. Hanging in there with a decent green day. Market is a little bit paused here near the top. So we took the highs out from Monday, pulling back a little bit. And the rest of the week is a new day. I continue to see this number growing. This was around 1,200 net today. Now it's at 1,700. So there's some more flows coming into this 573 strike. That's what I'm saying. By Friday, this is probably going to get hit. If we have a futures flow that pushes higher and gaps the market up, don't be surprised if we hit 573 by Friday. If there's more of a recovery through that, yippee skippy. So I'll be watching for those levels by Friday. Green across the board, 75% broad market rally today, pretty good. S&P is up, equal weight is up, NASDAQ is up, Qs are up, Dow is up, Russell's up, all the Russell's up. VIX is down, that's important. Dollar index continues to make some fresh lows. And I'm not fighting this. I mean, the dollar index at best is a pullback into here to get faded again. I don't think the dollar turns at this point. I think this dollar is, if it pulls back at all, it's a pullback and then a sell. I think the dollar is potentially heading back down to this 101 or 100 zone, and I'm sure there's some interested sellers waiting up here to sell it. Watching the dollar peso right now. Oh my gosh. You're just starting trading Forex and you're starting on the dollar peso? You're crazy, man. I traded the peso back in the day. I stopped trading the peso during COVID. When we had a 2020 Trump trade slash COVID trade. I was like, you know what, this is nonsense. This is the 2016 Trump trade on the peso. I was long going into the election, and once we hit this top, I was short on the peso. That was probably my magnum opus of returns on that particular currency, and I'm happy I didn't trade this thing through COVID. This was ridiculous, and I kind of got bored with it after that Trump trade. I'm like, there's just too much manipulation here, and I just didn't like it. So I lost interest on it. But I was in the peso last year, or in 2022 versus the yen. The peso versus the yen was a good trade. It was a great carry trade. But now, I don't know. I mean, this thing is kind of tightened up a little bit. I just say be careful. I mean, to me, this looks like pattern wise, this honestly looks really good for a potential long term bear pattern. Left tip, center tip, right tip. We come back and retest that high. Man, if we roll over and get a nice bear trend, this thing could be heading way lower. So I know that's not easy when the market moves, 2, 3, 4,000 pips a day for an exotic pair like this. But man, structurally speaking, I really like that trade. But the margin is high, which is not good. It's an expensive currency to pay to trade. Even a mini lot or a standard lot costs like, I don't know, $7,000 to $10,000 to take that trade. So it's usually 2 to 3 times the price of like a typical euro dollar position, which is like low margin. So just be careful on that. Just be aware of margin. Yep. But yeah, that is a crazy trade to just be starting forex and be trading the peso. Oil. Who knows? I just don't like oil. I don't like oil right now at this floor. It's either a bounce or it's not. I don't know if this floor holds. It looks like a pretty good buy trade if you can find some asymmetry, but that is inflationary. That is disinflationary. I think this current combination, like the Fed wants to see lower inflation, the Trump administration wants to see lower inflation. If we're going to drive down the headline inflation, you're going to drive down food. You're going to try to drive down food. You're going to try to drive down energy prices. That's a big factor of like the sticky inflation. So if energy prices decline, that's a good improvement to overall inflation. But now you have core, which excludes food and energy. You have super core, which excludes food, energy, and housing. And what's next? They'll exclude whatever is up. They're like, now we'll just do it super core. Anyway, so holding on to double up. Yeah. For now, because I want to see. So the plan would be if by Friday we are greater than 565, I'm going to close out the 321 expiration and then let the 328 expirations run to full credit. So either the one that stays bullish runs to full credit, and then the one that I lose on for the put side is a loss, and then I'd have 2 winners, 1 loss, net profit, and overall be happy. Yep. Okay, so oil there. Natural gas, I'm still long on natural gas. This is another one that may get called away. I didn't. This is April. Let me double check this one for UNG. Yep. So it's a $23 call. It's a sell call on my diagonal spread out to April 17th. If we are greater than, this would be an $18 max profit. It'd be about $700 if I'm right on this trade. So I'm only up about 38% of the trade right now. If we're greater than 30, I'm still going to roll this. I'll roll this for income. If I can roll it to get out of the way, so be it. This is going to be probably pretty volatile, but let me see if this gets up to fresh highs, and then I'll look at rolling. Gold. Fresh highs, another cycle, 1, 2, 3, 4, 5, 6, 7 candles in a row. Maybe another 7 to 10 candles to the upside, then a pause or pullback on gold. I still think it's overbought with some divergence. Silver, I wouldn't mind seeing silver just continue to stretch up towards $35, $36. Bitcoin, decent. We're below the 200 moving average. We're below the 200 moving average on the daily time frame. I think Bitcoin is still going to be chopping around in here. Chopping around. Eventually, if we get more certainty in the market, we get some more risk appetite, then yeah, Bitcoin makes a run. We possibly have a stretch move to like 125 this year. Maybe momentum gets us up to 150 this year, but we have to get on the right-hand side of this trend line, and it's just not really going anywhere. This is a really good gauge for risk appetite. If we are not on the right-hand side of this trend line, this is a caution area. Okay. It's called profit. No, it's called project Donna. It's called Project Options Edge. Project Options Edge. That's what it's called. So IBIT, watching this one. See if we can get up to the $49, $50 area. MicroStrategy back above 300 bucks. I've got a collar trade at 310. Perhaps if it's above 300 bucks, great. This is through. We got earnings May 6th, and I've got a collar trade through May. Well, I mean, risk appetite's probably if Bitcoin is up, then this is probably going to be higher. I wouldn't mind getting rid of this one for an income trade. I brought the cost basis down from $346 down to $260 in about a month or two, and probably 2 months. Which is fine, but I also dealt with the collar trade, lowering my cost basis. It was helpful, but yeah, it was not super fun. Coin. We are up today a little bit. This 195 is a key level. I may take some assignment next Friday on Coinbase. Let me double check here. Coinbase. So they're all, yep. So it's all 111 trades out to the 28th, which is next Friday. So for greater than 195, there's no assignment risk. And that is fine by me. If I take on the assignment, I'm going to look to basically repair it. I'll try to repair it for, 500 bucks or maybe more. Copper, holy surge, man. So this is another reason that I don't think the global economy or even the U.S. is going into recession. If the U.S. is going into recession, copper would be in way worse position than this. Copper is ripping to all-time highs. Dr. Copper seems to be excited. I've got this trade here that I'm almost looking to add in again and again and again. But I say that, and how high is copper going to go? Are we going to get to all-time highs on copper? And this is a crazy rip up here where copper's like one of the best performing assets. Heck, is copper outperforming gold this year? It might be. So for the year, copper. So we started here. Copper is up 27%. Wow. Copper's up 27% to kick off this year. Gold for the year is obviously started off pretty well. Gold is up around 16% for the year. Copper is one of the best performing assets. That's crazy. Good for Dr. Copper. So I'm saying that because if copper is running bullish the way that it seems to be running right now, I don't think this market is thinking about a recession. I think they're spending elsewhere. China is spending. Europe is spending. The U.S. is stalling, but I still think there's going to be supply side economics on the U.S. side. I think government spending is not going to go away. I think this was a needed correction, needed narrative to at least get a correction in some of these assets that were overbought. But copper is not showing any real signs of a monster bear market. So unless we hit all-time highs here and then copper just fades crazy hard, then the narrative changes. But if we get to all-time highs with momentum going higher, copper, in all honesty, might be one of the craziest trades of the year, and it might just continue to rip. Okay. All right, Japanese yen. I'm out of Japanese yen. That was a good trade. FXY, I'm still long, holding on to this one for some shares. EWJ. Oh, hello there. EWJ, a little Japanese yen. My purchase is finally showing some gains. Okay. Got some shares of this. 1, 2, 3, 4, 5, 6, 7, 8 shares at 71.59. So 8 times 21, so 168 shares, which isn't a bunch. FXY is my bigger diversifier for the Japanese yen, but this is a little dollar cost average into the Nikkei. But what I buy in here, so that was 21 shares at 71.59. I did a $1,500 position there, and okay. All right, well, here's what I said, right? Level 1, I'll buy it, which was on the comeback after this, like July to August, and then we had some chops, so I just bought. It's more like set it and forget it type trade. But if this goes higher, that's a non-US trade. Level 1 was filled. Level 2 has not been filled. This was the August 5th low. So anyway, that's it. Good. It's finally nice. DXJ, that's another way to trade the Japanese yen. Looking pretty good. Japanese hedged equity fund. The DAX, let me go FXY, long those shares as Japanese yen. EWJ, DXJ, that's like being long the Nikkei. Nikkei is still down. This is interesting. Nikkei is still down. Nikkei is still down, but this is up. And this is up. So hedged equity fund. What is this guy? This is all Asia. This is Abenomics targeted dividend focused portfolio. There we go. So it's a bit more like flight to safety. Export oriented, sector maximum weight. And what is the dividend here? 3.4%. Okay, that's fine. So you got price appreciation plus dividend kicker, not bad. Germany is back up testing all-time highs. My sells on FEZ are looking pretty good. FTSE is stable. A lot of chop. I actually like Germany a little bit better. Argentina looking for a bounce off this 200 moving average. China up to some fresh highs. Brazil, I'm liking ILF and I'm liking Brazil. These are another two non-US plays for the year that I put in my portfolio. We're back into these 2022 lows. I think there's a lot of value in this with potential upside. I mean, even if I have no idea, but if this is are you a new channel? I mean, I've been trading for 25 years. I've been doing YouTube for like 2 years. So I just started to put my content in one place, and part of it's YouTube and then Discord. But yeah, I'm not new to trading. TastyFX is my broker. I migrated from Oanda to TastyFX. I've been with I'm trying to think back in the day. I started with Global Forex Trading, went to FXCM, went to Alpari, went to Forex.com, went to Oanda now to TastyFX. I've been all over the place. I go to where my money is treated best. I want low commissions. I want good support. I trade a lot of robots as well, so I want a reliable server. I don't want my crap changing every 3 to 6 months, which is what was happening a lot with Oanda, which is why I started to migrate away from them. My robots were getting disrupted like every 3 to 6 months, which was really annoying. So, yep. Okay. So, yeah, if you have any questions, let me know. You can always leave comments and ask. But I mean, I've got tons of stuff on my YouTube channel, lots of videos and free education. Check it out. It's exploring all the different asset classes. So off you go. Okay, EWZ. This is so like I was talking about for Latin America. This is EWD is Brazil, and then Latin America is ILF. This to me is a value play where if this has any upside potential back into these pre-COVID levels, I would love to take this thing up into the 40s. So I have a little chunk of shares here on 26. We get up into like 47 to $48. It's not quite a double, but that's pretty darn good. Another just kind of allocation. If it runs, it runs. Great. If it doesn't, I'll hold it. If I start to get a little bit more conviction here, then I might be throwing in some option trades to kind of juice the gains. But I'm looking for a trade like that. We've had a long multi-year range, and coming back to near COVID lows, I like the lows. So if we trade back into the middle of this range, like I understand this isn't perfect, but if we come back to this pre-COVID level, it might take a year or two, but man, that'd be a heck of a trade. Do I trade in A1 Trading? I'm in their sessions like every day. They let me pop in. I'm one of the contributors. I run an alert service with them, but I'm in their sessions every day from like 10:15 to 11. Yep. Evan says definitely not a new guy. Yeah. Yeah, I've been trading for a long time. Okay, mags. Can we get back above? I mean, the price to earnings ratio on mags or the price to earnings multiples changed heavily on mags with this decline. The nice thing is we're stabilizing here. I think that's a good thing. Mag's down about 22%. Look, I'm not saying that this has to go back up, but I'm saying that if mags is going to go up a little bit, that is going to help the broader market. So I think it's funny how quickly the market's like get away from mag 7, and then all of a sudden it's like, well, heck, it's kind of attractive now because all these high PEs and these high multiples have come back to reality a little bit, and it might make it a little bit more attractive. So I wouldn't be surprised if there is some reallocation into Mag 7. Again, large cap tech with the market cap that they have could influence this rally. And if we get back to the 200 moving average, that's still upside potential, right? We go down a little bit more, but it's a bear trap. We get back to the 200 moving average or back through this 200 moving average. That to me helps put in a more of a floor in the market in the near term. Okay, speaking of Mag 7, Apple, stabilizing a bit off the lows. Amazon, same thing, stabilizing off the lows. Broadcom stabilizing off the 200 moving average. Google, pretty nice flush. I've just been dollar cost averaging in. Got some ratio spreads and income trades on Google. This one, I believe I closed out already. The 155 by 150. Let me double check that one. Google. Have some shares. Yeah, this is out to May and June. Yep. So these are all income trades further out. My March one I closed out for profit. That was last week. May, same thing here. Would I own some shares of Google? Yes. If I do, I'd own it around 145 or 143. That's quite the discount if I own any shares. It could still get there, but we'd have to have another aggressive flush lower. And then out to December, kind of the same situation, just trying to pull some income. Meta, we tapped the 200 moving average. I mean, in a short-term trade, this isn't a bad environment to say, you know what? If Meta has a bounce, this is a pretty good spot to find it. I don't know if that's the case. I really don't. I don't love buying Meta right now. But if I looked at the option chain, I wouldn't do anything crazy aggressive. But looking at the option chain on Meta, I mean, I think earnings would be solid. So even going out through earnings on the 25th, I mean, let's see. I might actually take this trade tomorrow. So if a bull call spread, so if I did a buy, sell for $2.70, I can make $2.30. If I go a little bit wider, now I pay $5.25 to make $4.75. That's not a bad trade. If I want to go a little bit deeper, I pay a little bit more. I'll look at these tomorrow. This shows that I could do a buy the 575, sell the 580, and only pay 250 for that. This spread's a little bit wider and it's closed today. So I'm going to revisit Meta tomorrow and maybe look at a trade out through earnings. Now, there's obviously risk in this trade. But if we get a bounce here off the 200 moving average, then, I mean, this stock is not hard to move $5 or $10. So if it goes lower, it's defined risk. But I'm probably one to throw a trade out. Okay, Microsoft. Holding in, income trade here, even into April, income trade here. If we stay above 370, some good positioning there. We're just kind of stabilizing on those lows around the 378 to 385 level. Netflix, I think Netflix is stuck in the middle. We still haven't hit the 200 moving average. We're not making highs. I've got a broken wing butterfly up here for some profit, and then I have this trade that's going to expire by end of day Friday. So this will be an income trade. This one, hopefully by April, is an income trade. I also have a profit trap if it gets back to all-time highs. But I think with this flush on Netflix, we're going high, low, lower high, lower low. Okay, if it gets back to all-time highs, I'd love to see that thing rejected. That would be a perfect little spot for my profit trap. Newsbreaker, we had a new trade on PDD this week. PDD. NVIDIA, up a little bit today. Recent highs at 122 and change. Sitting at the backside of the trend line. Mag 7 gets a lift. NVIDIA probably gets a nudge. That's not a bad thing. Tesla, I might be taking some ownership of Tesla this week. Shares would be assigned at 255. Ownership would be around, trying to think, 250 minus 217, 247.83 be my break-even price. 247.83. I could literally go out and sell, one covered call and pull in probably $1,000 of credit and repair this thing for maybe $200 to $500, which for right now I'm okay doing, because in case there's more downside, I don't really feel like riding Tesla for another chunk lower. Not that I couldn't, not that it'd be the end of the world, but that to another, let's say, 10%, 15, 20%. If I own some shares, there's two ways I do it. Either I get out with a covered call because I just want to sell the premium and collect the income, get it called away, or I put in a collar trade, I finance that put, and I sell a call and I buy a put. And if price goes down, I can lower my cost basis. If price goes up, I get it called away and I flip it for income. Will Meta be newsbreaker? I don't know. Maybe. It might be a double up, honestly. But I mean, if I don't have a catalyst, I don't know. It depends. I don't mind just talking through it, but we'll see. Do you need to own 100 shares to do a spread for Meta? No, you don't have. That's the beautiful thing about trading options. I could do that debit spread and own 0 shares, and there's no assignment risk. And I could risk basically, $250 to make $250. And if it's bouncing at a technical level, and I need to wait, maybe 30 days or so, and see if the trade pays out. Berkshire Hathaway, this one's going to be a full profit also for this week. I'm going to let that one expire. I mean, Berkshire is great. I wish I would have just, taken a heavier position, but it is what it is. So I'm making probably a couple $1,000s in this trade, and I'm happy with that. Bonds, as I did earlier, bonds are fine. I just want to see where this like 92, $93 will go. I think if anybody's bullish on bonds this year, this is not a bad spot to do it. The only issue with bonds would be this. If the stock market goes higher, I don't know if the bond market's going to go with it, right? This year we broke the correlation. Stock market's down, bond market's up. So if you're long TLT, that also means you're kind of cheering on the equity market to go lower, which is good protection, right? It's a good hedge, but not necessarily the guaranteed direction. So if you're really bullish on TLT, that means you are kind of cheering on the stock market to go lower. And maybe you are, but I'm not. I think that bonds are fine, right? We have a range trade here. I think bonds are fine. It's not my favorite trade. I'm trying to, generate the income that I can in the stock market. It's way more, way more opportunities to me to diversify the risk and get some good premiums in selling options. Fed funds, they held rates today, no surprise. Let me see if anything changed on the watch tool, and then I'll let you go for today. So probabilities right now, we're still looking at a June rate cut and a September rate cut. So not much changed. I will talk about this more tomorrow in live sessions and also tomorrow afternoon for final hour. But not much change. Like the Fed expectations, still looking at 2 cuts this year. Going to the dot plot, we're still at, for the year, about 10 of the members sitting at that 3.87. The chart still sitting around the same thing for 2025. Very little changed here. And again, I'd like tomorrow, if this is updated, or going into Friday, see how this changes in any way, shape, or form. It might not change. Today's comments from Powell were really, everything was already expected. No changes. All he really did was he just kind of patted the economy on the butt and said, you're going to be okay. We're watching things. You're going to be okay. Things are steady. Labor, inflation, price stability, all these things are okay from the Fed's gauges, right? So the Fed doesn't have to step in and react. The Fed doesn't have to do anything to fix. Doesn't have to manipulate. It can just exist and be mindful of the data points, the uncertainty that are getting priced in. So that's not a bad thing. Okay. All right. I'm gonna let you go for today. Thanks for being with me. Nice to see some new members and faces. If you would kindly, if you're not subscribed to my YouTube channel, feel free to youtube.com/Chris Pulver. Also youtube.com/Financial Wars. You can subscribe. Click the notification bell so that way when you go live, you get notified. Also, I have a free Discord channel and a free Telegram channel if you'd like to join. Here is my Telegram channel. I'll post that right now. Telegram. So there's Telegram, and then my Discord, I'm literally going to put a link that's going to last like just a few minutes. I get so many like fake garbage on Discord. It honestly like makes me hate Discord. I keep a very clean channel. I just use Discord to put all my content in one place and get all the links and classes I run, education services I have. It's all in one place. My Discord channel is pretty organized. It is not one of those Discords where there's tons and tons of things. You come into my Discord channel, everyone can talk in free group chat. Everyone can talk in Forex, stocks, futures. When I go live on YouTube, when I put in anything from a blog to posting on Twitter, analyzing the market, I do a lot of private one-on-one sessions with people. Also, affiliate discounts from software, services, applications. I've got a lot of good industry relationships. So broker, sponsor deals, blah, 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 whatever. It's all in there. So it's just a one place to put all my content. Okay. But I don't send friend requests. I don't send direct messages unless you do it to me first. If you want to send me a direct message, find me in the free group chat. This is me, right? If you come into my channel and it looks like friend request from Chris Pulver, it's not me. Okay. And I literally flush this crap out every single week and it's super annoying. So my point is, if I do a server invite here, let me go to invite people and I will edit this link. This link is going to be good for 30 minutes. And there's my link. So copy that. Let me throw this in the chat. 30-minute link for Discord. There you go. Okay. And I want to check. I'll just show you this. I will go into my server settings, go into members, and I will see if I have any scammers and imposters out there, because sometimes they just creep up. Okay, so I did a cleanse yesterday. This is really me, but I took a screenshot and posted this in my Discord under, I think I just put it in the free group chat right here. So this is what happens. Spelled wrong, underscore, double letters, just stupid crap like that. So I don't send friend requests. I don't send direct messages. That way you know who you're dealing with. If you want to talk to me in the public channels. Okay, so just my little disclaimer there for Discord. Cool. All right, sounds good. Okay, everybody, thanks for being here. See you tomorrow. Thanks, bye.